Hello, I'm Kelly O'Byrne and welcome to LCG's preview for the week ahead. I'll be talking to our Head of Research, Jasper Lawler, to discuss the beginning of the US earnings season, trade war developments, a top in the dollar, and Donald Trump's first official presidential visit to the UK. Before that, though, I'll run down some of the top corporate results to watch for this week. On Tuesday, Ocado offers up its half-year numbers and PepsiCo reports quarterly earnings. On Wednesday, Micro Focus International gives a half-year earnings update and Delta Airlines reports its second quarter results. On Thursday, Norwegian Air and Domino's Pizza report second quarter earnings. Then on Friday, big banks JP Morgan Chase and Wells Fargo kick off US earnings seasons with second quarter results. On top of that, UK firms Barratt Developments, Burberry and ASOS all release sales updates. Moving on to the economic calendar, there's Germany's trade balance on Monday. On Tuesday, we have Chinese PPI and CPI for June, UK industrial production and German ZEW. On Wednesday, it's US PPI and the Bank of Canada rate decision. On Thursday, it's China foreign direct investment, German CPI for June, the ECB meeting accounts and US CPI for June. On Friday, there is China trade data and Donald Trump makes his official first state visit to the UK. So Jasper, the trade war is still rumbling on.
It is, Kelly. So when we're filming this, the tariffs between the US and China are just about to kick in. So China first, even though it is a retaliation to the US just because of the time zone difference. It was about midnight going into Friday that they're starting. So when you're watching this, I'm assuming they have gone through. Obviously, there's a chance they never do go through, or there's a chance they get cancelled, and markets are still probably holding out some hope.
Yeah.
But I guess there's two ways to look at this, really. A, it was a sort of, you maybe sell the news leading into these tariffs, and now that they're actually happening, well, there's maybe a bit more of an acceptance by the news, or the other way of looking at this as well, this is actually happening now. This is no negotiating tactic. There are tariffs in place. The free flow of goods and services is being slightly more restricted. So that's not necessarily good for global growth, good for markets. So two of those competing factors. I lean towards just the fact that other factors taking place in the market, that maybe people use the fact that it's actually happening now, a bit more certainty about it. Maybe you can, for the time being at least, focus on other things.
Mm-hmm. Okay. And is it the trade war that is the cause of this at least temporary top in the dollar?
Well, it depends where you're looking. So in the emerging market currencies, I would say it is. Mm-hmm. These trade concerns have sort of plateaued a bit as we've head into these tariffs officially being enacted. That said, the Chinese yuan, for example, is at 11-month lows. It's looking very soft. So it seems like some of the dollar strength has moved its way out of, say, European currencies into selective areas of emerging markets. One differentiator is whether they're oil exporters or importers. Obviously, the exporters of oil their currencies have been doing better since the oil price has been rebounding. Opposite for the importers. But I think when it comes to these European currencies, the reason that they have sort of started to bottom out a bit is because actually the central banks here have been turning a little bit more hawkish recently. Mm-hmm. So the ECB and the Bank of England, both ECB firstly, obviously, in its last meeting, talking about actually, officially admitted it's going to taper and finish its asset purchase program in December. And the Bank of England, Mark Carney, last time he spoke in the week, he seemed to be implying an August rate hike was on the table, while also supporting England football team. So that was good.
That's that. Right, so also looking at equity indices, they don't seem as phased recently.
Yeah, I think there's a couple of reasons for that. I mean, what I sort of alluded to a couple, but one I think is the fact that we're almost at US earnings season now. So it's obviously, we mentioned in the intro, a couple of big banks reporting. Banks in a higher interest rate environment stand to do well, so they actually, and it's been a more volatile market as well. So for a couple of reasons, they could perform well, and so that would be a positive start to earnings season. I think the general consensus is that you can't keep up the earnings growth from last season just because the US tax benefits are not as prominent as they were just a quarter ago. But they're still there, and so I think the feeling is still overall positive about earnings. And so it's a matter of, well, we've got all this geopolitics, but now there's something else to focus on. And then I'd say for Europe, that political risk that people were really starting to worry about, particularly with regards to immigration. So Italy blocking immigration policy at the EU, and Germany's Merkel facing a bit of a standoff in her own coalition. They seem to have calmed down for now, and so that's supporting European indices.
Okay, great. And now I just have to ask, there are these big protests for Donald Trump's first UK visit, but any likely effect on the markets?
Well, it's a risk event, for sure. I suspect not. It certainly is going to be symbolic. I don't know if you've seen the Mayor Sadiq Khan has approved a big blow-up Donald Trump, evil-looking Trump balloon to float above the protest. So it should be something to watch, but materially, I don't think so. The only thing I'd say is the backdrop to this is, again, going back to trade. If, as it looks like is the case, sort of depends on the developments on this meeting at Chequers that's taking place with Theresa May and her kind of core Tory MPs. But if it turns out the UK is not going for a sort of customs agreement with the EU, then this meeting needs to go well, right? Okay. Because we want the US to carve out a decent trade agreement with the UK, specifically outside the EU. So for that reason, we need the Donald on side. So that's why he's here.
Yeah, okay, great. Thanks, Jasper. And thank you all for watching. If you wish to catch these videos just as they're released, please follow LCG on social media.